30th. We've got a lot of incredible headlines. We're going to be going over a lot of news over the weekend. There was a lot of economic conversation that was going on. We're going to be covering some of the news from McDonald's. Also, former Vice President Mike Pence, the presidential candidate, has officially dropped out. We have that clip that we're going to bring to you. A lot of things that are going on. We're going to jump right into the news. A lot of stuff. We've got some really great post that was done by Charlie Gasparino, as a Fox News correspondent, that we're going to show on this program as well. But we really want to go in and really break down the news of how it's going to affect you, where your tax-paying dollars are going, and why it's important. So I want you to stay tuned. We've got a lot of really great things. Also, check out PetVivo Cares. We're going to show you some of the new great work that they're doing. Check out your local adoption centers as well. You can look at GK Rescue out of South Florida. You can look at the Humane Society in Brevard County, doing a lot of really great work. We're going to bring you some really great content to talk about the spring product and some of these other things that are going on. We've got some other great products that we're going to be bringing as well from Sigel Diaz Beauty and some other health-related companies that we're going to be featuring as well, with regards to just what's going on in the marketplace. So with that, thank you for joining. Make sure you like and subscribe. And this is the American Wallet.
Coming to you live with the insight you need from the financials and political capitals of the world to the heart of innovation. This is Opportunities to Consider with your host, author, speaker, and corporate strategist, Hunter Gayler.
Welcome, everyone, to another edition of the American Wallet and Opportunities to Consider with the Markets Hunter platform. I am your host, Hunter Gaylor. Thank you for joining me. It's good to have you here. I want to dive into some of the news that's very relevant right now, and that is the U.S. GDP. And the U.S. GDP has been hiding. I think that they're weakening because they're hiding behind some massive debts. There was an article that came out that I want to go through a little bit here, where the United States is borrowing its way to disguise a recession. And this is very important because real GDP growth surges to about 4.9% in the third quarter, above the consensus, which we're estimating about 4.5%. However, some analysts, including Bloomberg, expected up to 5% growth based on the nowcast estimates. And that's very important for us to understand, because what's really interesting here, and I'm going to play a clip here, is what's more concerning. The figures in the GDP is a strong economy does not show a decline in investment of this magnitude. We've seen a decline in the investment. Working on Wall Street, working in the global capital markets, we've seen that there's been not a lot of oxygen in the room. So we're seeing people more reluctant to put into private equity opportunities. We're seeing a lot of decline in a lot of the small mid-cap market companies. We're seeing some stability they're holding, but we know that a dollar is a trigger point in the market. And what we have to do is we have to focus on what exactly the direction the economy needs to be heading. We've seen some growth in some oil and gas stocks. Obviously, we've seen a massive increase in the defense industry from companies like Raytheon and Halliburton, and the banks getting behind that. So this is really kind of feeding a war machine that both the Republicans and the Democrats like. I'm not personally a fan of that, but I always go back to Dwight D. Eisenhower, where he said, beware of the military-industrial complex. But we do have, and it does play a major factor in some of the things going on. But I'd like to pull up a couple of clips here that were in the news. McDonald's sales and profits beat expectations in the third quarter, thanks to higher prices and movie-based inspired ads. But the U.S. consumer traffic has dipped for the first time this year. And I want to play this clip, if we could just bring that up. I want to play this clip here and get your feedback on what we actually think is going on.
One stock to watch at the open: McDonald's third quarter sales topping estimates thanks to higher prices. The CEO saying, quote, "The macroeconomic environment is unfolding in line with our expectations for the year. We remain confident in our future and the strategic direction of our business." Abigail Doolittle has more on expensive burgers. Abby.
Yeah, indeed. And it's interesting, Lisa, because they put up a very strong quarter. Adjusted earnings did beat by about 6.5%. Those came in at $3.19. Sales comps came in at 8.8%, a full percent better than what had been expected. What's interesting, though, is it did come on consumers accepting higher prices, that pricier burger. But there's headlines coming out of the earnings call right now, and there's sort of some mixed messages. So they're talking about expecting to see the tough macro to continue, inflationary pressures. But they're also talking about the idea that consumers are still accepting price increases, but they're saying that they are benefiting from a trade down from pricier options. So if I'm reading this correctly, it sounds as though some consumers are willing to pay up and that the ones that are not are trading down, and it is benefiting McDonald's. On the year, Lisa, this stock basically flat, but today it is getting a pop, up about 1% off of its highs, but nonetheless the best day in about 2 weeks on this solid quarter.
So it's very interesting because when we talk about an economy where we have rising interest rates, we have rising gas prices, we have rising foods, the fact that McDonald's has now raised their prices, and we understand that they are a staple in this country and obviously around the world as a national brand at the Golden Arches, which you can't miss whenever you're driving around, does bring about some concern, because when you look at the scales of economies and you look at the supply chain and how the supply chain has been affected because of COVID and government shutdowns, we really have to go back and we have to look at both ask the microeconomic question and the macroeconomic question is, what is going to be the consumer sentiment? Now, obviously, Wall Street has different trading patterns, and they look at different revenue earnings and their revenue target goals. Anyone that's watched our program and understands the way that we look at companies, it's very specific. We look at companies with a very strong 3 to 5 year growth trajectory, and we look for the long-term buy and hold. We're not looking to really play the daily stock game, although there's a lot of people out there that do. And we see a lot of these kind of economic questions come about. You're looking at consumer sentiment, even when you look at what's happened in the movie industry with the rise of AMC and GameStop and what's been going on with the naked shorting and a lot of these things where the SEC is coming down, companies like Vocal, VOCL, and other companies that are really kind of trying to be the cheerleaders and the fighters to break this naked shorting. We wonder if it's going to actually expand to some of the bigger companies. It remains to be seen. But I want to move over now to a clip in the political sector. Mike Pence over the weekend was speaking in Vegas, and he made a quote that is very simple. He said, there's a time for every purpose under heaven. After traveling the country the past 6 months, it has become clear this is not my time. As we leave this campaign, we do so with grateful hearts, and I will always be grateful for the opportunities my family and I have been given. Well, he was given an incredible opportunity to be picked as Donald Trump's running mate. He should be immediately coming out and endorsing him. We have not seen any of that happen. Like I said, this is the American wallet, so we want to see 9 times out of 10 what happens in these scenarios is when a candidate like this drops down is because they're out of money. That is very straightforward. That's basically what happened. So obviously his campaign was losing a lot of money. You can go onto any of the charts and you can look at it. You can look at any of the filings and you can see that his momentum. But nonetheless, I want to play the first part of this clip.
Last June, I announced my intention to seek the Republican nomination for President of the United States because I believe this country is in a lot of trouble. I was raised to believe that to whom much is given, much will be required. And with everything our country is facing, I just couldn't sit this one out. But the Bible tells us that there's a time for every purpose under heaven. And traveling across the country over the past 6 months, I came here to say it's become clear to me this is not my time. So after much prayer and deliberation, I have decided to suspend my campaign for president effective today. Now, I'm leaving this campaign, but let me promise you, I will never leave the fight for conservative values, and I will never stop fighting to elect principled Republican leaders to every office in the land. So help me God. Thank you. Thank you. Love you.
All right, so obviously there was a lot of applause. We don't know if that applause, the fact that he's getting out of the race, or if they were actually applauding for the fact that he is no longer in the race. One of the two. We don't know. We'll figure it out. I want to move over to some interesting news. There was an article written by Charlie Gasparino that came out in the New York Post, and the title of the headlines was "The Apollo CEO Mark Rowan, who's obviously a very successful, very wealthy individual, hits back at UPenn leadership after anti-Semitism on the campus." Now, what's interesting is Mark Rowan, his plan to oust the leadership of his alma mater at the University of Pennsylvania is picking up a lot of steam, and it could blow about $1 billion hole in the school's fundraising efforts, which is what the Post argued. And of course, he wrote in this. But one thing is someone who's gone to an Ivy League school, received an Ivy League education, and seeing all the anti-Semitism that's going on, to me, without trying to take my diploma out of its frame and mail it back to the university, which I'm tempted to do, I think it's a very stark reminder for us that money does not always buy wisdom. And unfortunately, we're seeing a lot of this stuff happen across campuses. And this is a lot due to the fact that the mainstream media, that our societies, that our family values, that our conversations and our relationships, etc., are bringing and driving this. We're not talking about the fundamental things that matter. They're beholden to this axis of evil, right? And they should be transparent about it. The fact that they're taking money from these groups, that they're supporting it, that they're allowing these organizations to go in. We have to ask our questions on, where's the money coming from? Where's the money going? Where's the money not going? And what is the actual support that's going into this? Because at the end of the day, remember, this is your dollars that are going to these universities when it's funneled through these various systems, and it's going in. This is the mind melding activity that happens when you understand the kind of the movement of the way money flows. So obviously this is a very big piece of conversation that's going on. There's a lot of things that are taking place that we need to be very much aware of. And so as we continue on with the conversation, we continue on with some of the headlines, it's very important. When we go in, I just want to talk a little bit about some of the market news that's going on here. There is this new world order, or this military solution for the Middle East war. I think it's really kind of been exposed. And I want to bring in and play a clip from the intro of The Trends with Gerald Celente, because he does a great job in breaking down exactly what is going on. And the way that he breaks it down is very, very clear. I want to play this clip, and then I want to come back and kind of talk about it a little bit.
That they shove down your throat, and you obey, and you listen to what we have to say, because we're exploits. We're little boys and girls that suck off the public tit. You ready? This is from Euronews. When was this? February 21st, 2023. All right? March, April, May, June, July, August, September, October. 8 months ago. This is the crap it was shoveling out. Ukraine war. Kyiv could gain the upper hand in 2023. But who says so? U.S. think tank. How about stink tank?
Now, we obviously love his semantics and the way he talks about it, but I do want to bring this up because it's very important. When you're watching trends in the market, and we have to understand, kind of by trends what we're talking about. We're talking about being able to follow an economic model. So when we see month one headline, $1 billion out, month two, $1 billion out, month two, week two, $1 billion out, etc., 500 million, and all the money is going, which is our tax-paying money, over to the Ukraine and the war and now Israel and all of these other things. It really is, as much as wars being fought overseas, and I don't want to get into that because this is the American wallet and we discuss really kind of the economic news, and we look at the US GDP and the real US GDP growth and what's going on with our national debt and deficit and the spending and all of these things going on. I think we get very much distracted because of what the news is talking about. We spend a lot of time talking about Israel coverage, and then you look at what happens, boom, they move to a shooting in New Hampshire or Maine or wherever, and then we're away from the war. Same thing with Ukraine. First we're talking about Ukraine, then Israel happens, and now, well, what about Ukraine? So there's a narrative that's playing out here that you have to follow. Very much in the public markets, it's the same way. We saw with the rise of AI. How is AI going to kind of dictate the investment ethos of companies? Now you have banks moving into cybersecurity with AI, or you have companies looking at quantum computing. I encourage you all to go over to the YouTube channel and watch some of our program that we've done with the CEO, Robert Lukowski of Quantum Computing Inc. They're an incredible company, actually building out the platforms where people and entrepreneurs and businesses and universities will be able to take that technology and build their own solutions to help create more economic efficiency and problem solving, because it's always, as we say, time to market, and that's very important. Also, when we look at trends and we look at what's going on, we look at the news that's being reported. As he said, Euronews, that was being reported, that was 8 months ago. Now you fast forward 8 months, we're in Q4 of 2023, moving into 2024. Obviously, a lot of the geopolitical issues that are going on are going to directly affect our markets. We're seeing, obviously, a spike in the oil prices. We're seeing higher food costs. We're seeing the first time we're having a default on the student loan program. We're seeing defaults in car loans. We're seeing defaults in credit cards. And so really you have to ask yourself, what is the government doing to address this? And yet our conversation is on who's going to be the next Speaker of the House. Well, we've got a speaker in, but now budgets are being approved to send more money over in support of these foreign wars. Now, I'm not going to get into the whole concept of the geopolitical issues going on between proxy wars. We go back to 1989, and we can move this up. I think it's very important that we look at some of the more pressing matters here that are affecting our everyday lives, and that's why we call this the American wallet. One of the things that's very important is we have to look at material costs for building. We have to look at some of the interest rate loans that are going on, and even some of the local municipality newses that are going on. In Brevard County, there's obviously a lot of drama going on with some news of a gentleman who built has 2 shipping containers that he's retrofitting to be a, quote, man cave in his backyard, and we're seeing complete uproar in the county and in the city and all of these things. Yet he was issued a permit and he was issued all of the right licenses, but because people are complaining about the eyesore during a construction process, it's now become an issue. And what it leads us to have a conversation about, which is very important, is the fact that at what point do you allow the economic engine of the entrepreneur to do a better job than the bureaucratic government and the red tape that goes on? And I think that's why a lot of the mainstream media never understood Trump. And I believe the reason why Trump was so successful is he was able to navigate the bureaucracy of what went on in our nation. I mean, he was a builder in New York, probably the most red taped, most politically left leaning city that you can. I mean, I've lived in New York. I work in New York. And between there and in Florida, I can tell you there's a lot of political issues that go on. There's a lot of government red tape. There's a lot of OSHA requirements. There's a lot of OSHA issues. There's a lot of there. I mean, we can go on and on and on. The list is too long for the sake of this program. But what we have to focus on when we look at the American wallet is how are your dollars being deployed? Why are they being deployed? How are they being deployed? And what is the reason for which that deployment is occurring? And a lot of it comes down to the decisions of the politicians not listening to their constituency, and that's a big problem. We look at the cyber defense industry, we look at the rise of the defense industry, and we understand that there are people whose salaries and 401ks and all these things, but they're publicly traded companies. So because they're publicly traded companies, it's going to rise and fall based on the decisions of the government. And that's a major issue, and people aren't talking about that. So that's why we like to address it here on the American Wallet. Now, what I want to do is I want to talk about two companies that are having some incredible growth. One is PetVivo. We're very excited about what PetVivo is doing. Obviously, I had John Laya on a recent program. We'll have him back on probably later in the week, if not next week, and talk about some of the developments in the companion pet space with dogs and cats. Their study came out, and it was an incredible study. It is one of the largest, well over 10%, which is unheard of when they do these university studies. They actually had significant response on the efficacy and effectiveness of the Spryng product. So we're very excited about that. We also are looking at a couple of new branding opportunities within the company, which is very great. So we'll be bringing that to you. It will all be in the description and the links below. And also, as always, we're going to have a couple of oil and gas companies because we want to talk about what's going on in the energy sector. So make sure you stay tuned for some of those interviews. And then also following that, we're going to be talking with Robert Lukowski again from Quantum Computing. We're going to also move into the insurance industry and talk to some leadership with what's going on within, some of the issues going on forward. We're going to be talking to some of those people as well. And then we're going to be talking kind of some Inside Edition with Doug Anderson. We also have Stephen Moore that's going to be coming on in some later episodes throughout the week that are going to be recorded, and we'll bring those to you as well. So we just want to make sure you stay tuned to the American Wallet. You can also follow our YouTube channel, The American Wallet 1776, and then you can follow Market Hunters, where all of our interviews are going to be there everlasting, so you can go watch it. Two more things on Bloomberg. I want to bring in this Rhythm Capital chairman and CEO Michael Nuremberg talked about the effort to buy Sculptor Capital Management. Now, this is a very big trade for those that follow Wall Street, because what that meant is that trade was about $720 million. And he spoke with Bloomberg Markets on that particular transaction. But as Rhythm's CEO said, it was his latest bid, and he was very hopeful to get the deal done. Now, what does that mean? When you look at Sculptor Capital Management, the fact that you can get the latest offer at $12.70 a share, hopefully that's going to bring the deal to a close. We're going to monitor it and see what happens. We'll bring you some coverage on that. We're watching a lot of M&A that's happening from very big companies. We also brought to you on our last Monday Markets update from the American Wallet. We talked about the merger between Hess Corporation and Chevron. That was a very big deal in the oil and gas business. We see some consolidation of funds. We want to bring in some of our expert panelists as well that's going to talk about what that means for the energy sector, what that means for the airline sector as well. We always see certain pockets of the economy that have done very, very well. However, we also see pockets that are underperforming in certain aspects. A lot of that has to come with government regulation and bureaucracy and certain oversight, but really it's going to come down to, is it going to increase the gross domestic product of the U.S.? I still think that there's been a lot of conversations on a Black Monday event that's going to happen. We haven't really seen that happen today, but we are going to be following it. We do see that there's some major moves happening within the Fed. We also see some moves with XRP as well. We're going to bring some other players in to speak about really what that means for your wallet and what it means for some potential investments and some other points. Like I said, we're going to bring in some more guests, but as always, We're going to take a real short break, and we'll be right back to you to kind of close out the program. So thanks for sticking with us.
Lameness issues, joint pain, and osteoarthritis can be difficult to treat and debilitating for an animal's health and well-being. Take control of lameness issues and joint pain. Introducing Spryng with OsteoCushion technology. With just one injection, Spryng with OsteoCushion technology targets the root cause of lameness issues, joint pain, and osteoarthritis, helping animals do what they do best.
States economy has shown a surprising level of growth in the third quarter. However, there are important temporary effects, things that are not likely to continue, and in fact, some of them will revert. The first one is the massive increase in inventories. Obviously, that is not going to last until the fourth quarter and is likely to come down quite significantly. Furthermore, the rising consumption comes at a time in which real disposable income is falling, and therefore consumers are adding to their daily expenses by increasing credit card debt, increasing debt, consuming savings. So that is unlikely to last for a very prolonged period of time. Important things to remember in any case is that the third quarter GDP, if we look at the last year of GDP increase, it's basically increased by $414 billion with an increase in debt, public debt only, of $1.3 trillion, which means basically that the United States economy is really not growing, but it's disguised by a massive increase in public debt. This is not just a problem of the United States, because you will say, okay, let's move our asset allocation to the Eurozone or to Japan or to other economies. No, my friends, this bloated debt-driven growth is something that is even worse in the euro area. Why? Because the euro area, on top of it all, is not growing basically at all. And if we look at the latest composite PMIs, what we can see is that the reality of the services sector is that it's in contraction, as well as the manufacturing sector, both at worse than 30-month lows. What we have to think, therefore, is that asset allocation must continue overweight in the United States because of the strength of the dollar in an environment of monetary debasement. The world reserve currency improves relative to other fiat currencies, not because inflation isn't elevated in the United States, but because the debasement of the currency in other economies is worse. So we need to continue to be overweight the United States, not just because of the macro conditions. As I mentioned before, at least it is showing some growth relative to other economies that do not grow, yet continue to increase massively public debt. But if we think about what to invest in, we have to have high exposure to the US dollar relative to other fiat currencies. And we must remember that the inflationary pressures coming from the commodity spectrum or the freight environment, the Baltic Dry Index, both are showing that inflation is a monetary phenomenon. Why? Again, as we always repeat in this channel, the Baltic Dry Index and the commodity spectrum have risen due to the conception of a geopolitical environment that is very risky, yes, which means that there's more money going to relatively scarce assets. Yet, the oil price and the Baltic Dry Index have corrected rapidly with monetary contraction. So, monetary contraction likely to continue, which means that the dollar is likely to be more scarce for all those economies that have increased their imbalances in US dollars, and therefore more demand for US dollars. Furthermore, persistent levels of inflation mean higher for longer rates, which is likely to continue even with geopolitical concerns. that means that we need to be exposed less to the cyclical sectors that have behaved quite well in this environment, because it's obviously going to show less of a positive impact from the macro and from the commodity spectrum. And also what we have to be is less exposed to emerging economies, less exposed to the Eurozone, because the underlying weakness of the economy, with the monetary imbalances, the weakness of the euro, and the worsening of the monetary imbalances in emerging economies, where they are not just suffering from way too high fiscal deficits, but also from a very imprudent monetary policy.
So obviously you can see that there is an imbalance that's going on, and it's going to take a very interesting toll on how we look at what the development of our indexes is. I encourage people to go look at the Baltic Dry Index. Gives you some very good information. I also want to make a special note here that November 17th is the economic conference that's going on. That's hosted by Martin Armstrong. We'll bring you some more information as we get some details on that. We're looking hopefully to be able to sit down with some of the speakers at the conference. We're going through our schedules now. And also we have a coalition conference that's going to be going on in Atlanta in November as well. We'll have some very notable speakers, and that's going to all be surrounding some of the issues that are going on with China, and really focusing on the American First policy. So I just want to appreciate and say thank you for joining on another edition of the American Wallet right here with the Market Hunters official platform. I'm your host, Hunter Gaylor, and I want to thank you for joining, and I hope you tune in next time. Make sure you like and subscribe across all of our channels, because this is the place where we go into these conversations and we'll bring you the leaders and the CEOs that matter. So as for Monday, we hope that you are having a great day.
Lameness issues, joint pain, and osteoarthritis can be difficult to treat and debilitating for an animal's health and well-being. Take control of lameness issues and joint pain. Introducing Spryng with OsteoCushion technology. With just one injection, Spryng with OsteoCushion technology targets the root cause of lameness issues, joint pain, and osteoarthritis, helping animals do what they do best.